Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about housing mentions in the State of the Union address and purchase apps as we head into spring. Before we dive in, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here. And of course, we're waiting for maybe something new from the State of the Union, and nothing too surprising. A few remarks on housing, things that we kind of already knew in place. I know the White House, they keep on, well, at least Pulte does, retweets our spread chart, where they talk about it. But, again, the spread started to get better at the end of 2023, and nothing too surprising. But again, this is the politics part. It's midterms. And we should be getting maybe some more aggressive things coming down the closer we get to the elections.
Okay, so I was surprised on a couple of things. I thought we might hear some interesting, innovative new ideas, right? Maybe they got burned on the 50-year mortgage and they're like, listen, we're gonna put it on hold for a little bit. They did mention the large investor ban that Trump has done trying to do through an executive order. But I thought that they could have talked up the fact that the housing is in a better place right now. They could have talked about mortgage rates have dropped. They could have talked about, demand is up and home. It feels like there's a missed opportunity on their part to kind of say, hey, this is what's going well in the housing economy right now.
Okay, so my structural bias is I wouldn't be doing a lot of plans because, we got to a better spot by just letting the marketplace kind of do its thing. Anything to help production of housing or make it faster or cheaper or whatever, I'm all for. But of course, the 50-year mortgage, portable mortgage, any of that stuff, I mean, how I would explain it, ladies and gentlemen, we are live in the State of the Union. Logan Mohtashami, the chart daddy, is going to be talking about the housing market. And I would say, housing is just in a better spot. So the housing market was really unhealthy in 2020, 2021, and early 2022 because for the first time in our history, total active inventory got to a level to where the supply and demand equilibrium, it didn't matter even if sales were flat. There were just too many people, right? Got 162 million people working, too many people chasing too few homes. But now price growth has cooled down. Right, we just got the Case-Shiller Home Price Index and FHFA. Year-over-year data was like 1.8 to 1.3% on both. Mortgage rates are not 7.5, 8% anymore. Right, the 10-year yield is lower. The spreads are better, so we're in a better environment with more inventory, and rates are at a level to where something could work. With everything that goes on, that's kind of how I would talk about it. But then again, I'm not kind of doing anything on the demand side or anything. I'm just letting the marketplace kind of do its thing. And we got to this point right now by just letting the market kind of have normal cycle work. So, of course, my answer, it's probably not acceptable in politics, right? Doing nothing. But I'm happy with everything because of all the variables put together, right? If inventory was low, and mortgage rates were at 5.5%, I'm still talking about, listen, this is not going to be a functioning housing market. But we're not at that spot anymore. The NAR data was 1.22 million in the last. That means when the seasonal curve happens, I get my over 1.52 million active inventory and more than 4 months supply. So I'm good on that side. But when you talk about politics and everything and affordability and all that stuff, people have to throw up ideas and see what sticks and what could happen.
He mentioned, he pointed out a woman in the crowd to illustrate his desire to ban institutional investors, and said that she had lost out on 20 different homes. She had bids on 20 homes and lost out to investors who came in with all cash. And I was like, I would love to know, maybe I wasn't listening close enough, like where she is and what time frame that was, right? So we know that there are little pockets throughout the country where a large part of neighborhoods are owned by institutional investors, but you'd have to be right in the middle of one of those pockets to lose out on 20 different homes. What are your thoughts on that?
I don't believe anything any politician says, unless I see the data.
Well, I mean, she was standing there, so I
I mean,
believe
just
she's
listen.
real.
Politicians to me lie a lot, so that's just what it is. If you're asking me, maybe the hypothetical neighborhood would have to be somewhere in Atlanta.
Right.
But
That's what I think.
again, if you're blaming investors, then you have to blame the millennials. Those creatures were buying homes and not even giving you a house, right? Like
Right.
Gen X and baby boomers, right? They have to sell their house. They have to give you a house. But those millennials, right, from 2013 all the way down to like the 2020 to 2020, they were the biggest home buyers in the world. Nobody scolds them, right? Listen, this is politics, right?
Right.
If you got Trump and Elizabeth Warren working together, something's something's off in the universe. But in this case, active inventory's up. There's no more multiple bids. So, is there a problem now?
Well, I
They
think
always say
there's multiple bids, in some parts of the Northeast. You see.
but there's nothing. There's no savagely unhealthy housing market. The days on market are up and fine. Anybody who could get a house. But again, when you have a crisis, you look at who's the wealthiest people out there,
Right.
and it's always going to be the case. Wall Street is always going to be the case. So I know they're trying to get it from 1,000. I think they ran the numbers and it just wasn't enough people to really move the needle. So they, instead of institutional investors 1,000 above, they're moving it down to 100 and up. So this is just the world we live in. Nobody blames the millennials. They were the biggest home buyers. Why? Nobody blames mom and pops. Nobody mentions mom and pop investors. They're the biggest investors out there. Why? Because if you start going after mom and pops, and then again, if you're forcing them to sell, people live in those homes, not corporations. And the last thing any politician wants is displacement of families into a lower supply marketplace, right? Because you got to find something. It's not like you could sit there and go, let's be homeless for like 12 months and then wait till something comes up. No, you got to move right away. And then the leases and everything, it gets a little bit more complicated. So it's just, this is the world we live in, right? So Wall Street's always going to be think about the rationality of this discussion. We're supposedly functioning adults with past the second grade education, and we keep saying it's BlackRock when it was Blackstone. This is the world we live in, right? Remember that it was in 2023, that one viral video that said 40% of all the homes in America were bought by Wall Street. 40 of all the homes in America that year. This is it. So take everything kind of with a grain of salt. But if they get that banned, then obviously the bigger institutional investors are gone. Mom and pops are still there. There's no what some people were talking about, like a forced selling, like people, because the dislocation of families would be problematic for any politician. So it is what it is. This is like when I think about the whole housing market thing, that is like the least most important aspect.
We know it's
but
a
for
very
me,
small part.
For me, as part of Team Higher Rates in February 2021, I got what I wanted. So I'm letting the marketplace work itself out. You just needed rates to go higher. And now there's no more multiple bids. There's no more, complaining about 50 people buying one home. Anybody can have time to go look at a house. Buyers and sellers are back together, right? It's no longer that seller's market that, they can demand no inspections or anything like that. So the savagely unhealthy housing market is now back to healthy. But that was done kind of by market forces, not by planning or doing some kind of rule and stuff. So we got here. We got to a better spot. Now, is inventory back to normal levels or anything? No, but we're in a more functioning housing market. And let the chips fall as they may, but this is a better marketplace for buyers and sellers to work things out, rather than what we saw 2020, 2021, and early 2022.
So if our listeners didn't watch the State of the Union or didn't make it all the way through, or haven't read, we did do a great write-up, Neil Pearson, and I listened to the whole thing. Neil wrote it up, and so he outlined the 3 times, I think it was 3, maybe 4 times that housing was mentioned. So one thing he did talk a lot about, though, Logan, which is near and dear to your heart, is tariffs.
Yeah, it is interesting because I think the tariff percentage of collection was like 9.7%, something around there, and then they they moved it to 10, and then they're going to try to do it to 15 at some point. Um, you think about this: Trump likes bully ball. He can't really bully other countries without tariffs. So he's got to have some form of tariffs. I mean, I don't know how he's going to function if he can't, bully other countries with it. But it's going to get more interesting getting closer to the midterms because I think Speaker Johnson kind of said, he doesn't think he could get the votes to extend, tariffs going out in the future. So we'll see what it is. If you guys look at the goods inflation data on the PCE inflation is going to be running, I think, 3 or 3.1% in the next report. You see that pickup out there, and then the one-time tariff things kind of roll off, and then we move from it. But there has been some conversation about, even with the tariff rules gone away, some Federal Reserve members like, this doesn't really clear up anything. But hey, we're here. I'm just happy inventory's up, spreads are better, for the housing market. Just kind of, we're so much healthier than the savagely unhealthy housing market of early 2022.
I would tell you, it was awkward last night when he's talking about the terrible Supreme Court decision and front row, right? I think there's 4 or 5 Supreme Court justices right there. He looks right at him.
Well, I think Obama did the same thing, right? That's one of the rulings that one of the State of the Union. So it's politics.
Anything else that you wanted to talk about from the State of the Union?
No, that's pretty much it. There was nothing really new. I was wondering if they were going to talk anything about the builders, maybe some kind of thing to help them. But I think maybe down the line you might get a little bit more ideas on that because I think with housing it's a little bit more complicated, to get some big changes. But again, the midterms are coming. We'll take it one day at a time. Anything new?
Boy, they are coming. We have primaries next week.
Sarah, you like that stuff. It's just not my thing.
Stuff.
I know you like it. You like it. It's just no.
Yeah, I know.
My world revolves around the 10-year yield. And by the way, we're still holding the line. We haven't broken under 4%, right? So I do my little Jon Snow gif. Like, come on, we gotta hold this. But it is very interesting with the bond market and a lot of talk about AI disinflation about coming out in the future. I think we're really peaking out on AI doom porn about taking all the jobs. You saw the video I made. I was fighting an AI robot. That was a great video. To take all the. He was bad mouthing. He said, "I'm killing all the American jobs. There's nothing you could do. It's futile."
I love that you're always the hero. Okay, so also I've been thinking about this because we've had several people that now adopt your Jack Bauer and I'm Chloe. I was thinking about this. I was like, no. Okay, this is why this doesn't work. First off, Chloe is so awkward. I am not awkward. She is the most. It's part of the whole thing. The whole shtick of that show is that she was so incredibly socially awkward. That's not me. Second of all, Chloe. Jack Bauer is her boss, but actually, in this situation, if you're Jack Bauer, I'm President Palmer. I'm President Palmer. That's what I'm claiming that right now. So
you don't want to be President Palmer. Things didn't end well for it. But listen,
I know, but he's a great character. So you can feel free to address me as Madam President. You can call me ma'am.
Sarah Wheeler, Chloe was running the organization in the very last season. So there you go. You want to you're the boss lady. I've never taken that away. But oh God, it was a gnarly character was President Logan in that show.
Oh yeah, Logan was the worst.
That guy was absolutely.
We don't ever need a President Logan. Okay,
that guy was off the rails, man.
President Palmer's wife too, I think. Okay, anyway, back to something that you do love to talk about, not politics, which is purchase apps.
Purchase application data, very, very interesting year. Of course, it's a very tricky survey. You and I have talked about this for as long as we've done this podcast. Well, I think it's a very tricky survey to kind of gauge at times. However, it's kind of like my no doubt rule. If any time we're using a data line that the baseline is when No Doubt was the top new band, it is the lowest bar ever in history. Okay, so and Gwen Stefani, she was a really good dancer back in the days. But here, last year we saw year-over-year growth all the time, pretty much but we didn't see the housing data line get better until the week-to-week data got better. The reason I bring this up is because late 2022, when sales started to grow, we had no year-over-year growth, but the weeklies grew. So it was confusing everyone. Same thing happened toward the end of 2023 and the mid part of 2024 is that the sales demand was getting better, but there was no positive year-over-year growth data. So I understand people would be like, what, sales are falling? They're not rising. I said, no, the forward-looking demand data. That's why you got to use multiple data line sets. But this year, so far, even with the snow, purchase application data is up year-over-year every single week. It's not using the no doubt low bar anymore. When we show our charts, you could see the seasonal flow of weekly purchase application data. It has that initial spike early in the year coming off the holidays, and then it has that little decline and it works off that base. But so far this year, weekly pending sales have been positive year over year mostly. They take the snow data away. New listings data, purchase application data was up 12% year over year. Last week was up 8%. It's actually the year over year data is doing a little bit better than I thought it would. But so far, it's again, healthier housing market with that. Now that the snow data has melted away, we could actually go with more forward looking. And I was really happy that the new listings data picked up. And you could easily correlate that to the snow stuff, but you want to see new listings data go, weekly pending sales go, and purchase application data show year-over-year growth. So the trifecta of that is intact. And again, this isn't like the big rebound in COVID or anything like that. In fact, the December existing home sales report at 4.35 million is actually higher than what my forecast is for 2026. But again, a positive demand curve. The growth rate of inventory, even though it's cooled down, is still up year over year. It's just a healthier housing market in that. I just think that's difficult to kind of portray out if you're a politician, because politicians need quick fixes, right? And this is it. Some things can't be fixed very quick, right? In that sense. So I'm really happy with how this year has started, even taking in the snow factor out there compared to where we were a few years ago. And the Case-Shiller Home Price Index and the FHFA Home Price Index came out this week. So looks pretty normal to me, right? The forecast for 2025 was 1.77%. The year-over-year growth in December was 1.3%. And for FHFA was 1.8%. Looks right to what I was thinking. For somebody like myself, that I know you don't like this term, but for me that has that negative real home prices and forecasts in 2024, 2025, and 2026. When you're trying to get affordability better, you need the price factor to come in to go with the wages. It can't be just rate related. So good aspect, good ending toward the end of the year on those price data, because the housing market has to get better that way as well.
I think the timing of all of this is really great too, because since COVID, we've had some crazy years as far as like when we hit peak inventory, when we see demand, and the HousingWire is seasonal, and so the fact that we're having this sort of stability in mortgage rates and seeing the demand as we go into spring, that's important.
It's it's interesting. I went back and read one of my old purchase application data articles in the last decade. It was 2016. And God, it was such a stable period back then. Purchase application data would have the second week of January to the first week of May. After May, total volumes fall. It would have this normal, demand curve, and all you used to focus on is the year-over-year data. Right? You want to see the volume growth. COVID has ruined a lot of things out here. Everyone has to adjust to this, but the tracker is designed to keep everyone at bay with tons of different variables at once. Right. That's why that article is about the 10-year yield, mortgage spreads, where mortgage rates are with the spreads, weekly pending sales, total pending sales, inventory growth, price cut percentages. And the price cut percentages, even though it's down year over year, a little bit more than 1%, it's still, at a healthy level. So it's weird to say this. It looks like a normal year. It looks like to me like a normal, it's been so long that we don't have to worry about all these crazy things. And the new listings data, again, this is just because a lot of people just never study the data. Back during the housing bubble crash years, that was running at 250 to 400,000 per week for years. right? We got
Crazy.
63. Yeah, we have, I think, 63,000 in the last report. Normal is 80 to 100,000. Again, most sellers are home buyers. If you saw any vertical stress out there in housing, the new listings data would go vertical. Like, because it's working from such a low base, these are very, very, very low numbers on a historical basis, so you can't hide it. And we just don't see it right now. We're about to go into March. So really, you would actually need to see it 18 months beforehand into the calendar year, because you'll see that stress. Nothing really goes straight vertical without a buildup out there. So it's a normal year. I mean, I love it. I understand politicians have to do and say things, but I couldn't have asked for a better backdrop, because, again, for me, it's different. It was unhealthy in 2020. Even though sales were up and prices were rising, that was not a healthy housing market. And here I am. So I'm just basically saying what I've always wanted from February of 2021. Not a lot of people would be happy with that, but for us to get back to normal, these things had to occur.
I agree. And I think everyone in our industry is like, they're like, give me normal any day of the week. Okay. Like no more years like 2022 or 2023. No one.
I'll try my best, President Wheeler. Yes. I'll get the spreads down. That's what you did. You sent me out to get the spreads lower. How about that?
Yes.
Get the spreads lower, Logan.
Jack Bauer is now tasked not with saving the nation from nuclear war, but to get the spreads lower. I love it. No, that's great. Logan, thank you so much for being on. As always, I will talk to you again soon.
Pleasure.